One of the top questions that I get from Forex traders is how to choose the best currency pairs to trade. Whether you're a newbie or seasoned pro, this is a great chance to ensure you're trading the currency pairs that are just right for you. Hello everyone, I'm Kathleen with BK Traders, and I want to welcome all of you back to our channel. In today's video, we will break down how to select the best Forex pairs to trade in 3 simple steps. But before we get into it, if you're completely new, you really should be looking at trading just the euro dollar. The euro-US dollar currency pair is the most liquid currency pair in the world, which means it has the tightest spreads, it has the most orderly price movements. It is the one that's written about the most, and there's plenty of information explaining every single day what's going on in the Eurozone and the US and why the euro is up or down. If you want to start with one currency pair and learn it well, it should be the euro dollar. If you're ready to expand your horizon, you're looking for more opportunities beyond that one currency pair, then let's get started. By the way, if you don't want to miss valuable trading tips like this, make sure you subscribe to our channel and hit the notifications button for updates. Step number 1, consider your own personal risk tolerance. Between the major Forex pairs and the crosses, there are more than 25 actively traded pairs to choose from, and they're all different. Some pairs, like Eurodollar and Dollar CAD, tend to have more orderly, predictable movements. They're great for traders who prefer a steadier market. They move slower, they have fewer gaps, they have less volatile trends, and nice continuations. I personally feel that they're easier and less stressful to trade. However, if you thrive on volatility, on faster moves, and deeper trends, and you feel that you can actually handle these swings, then you might want to look at the British pound and its crosses. Sterling always moves faster and further than the euro, especially when we have a rally or sell-off in the US dollar. Sterling crosses like pound yen, pound Aussie are known for their volatility and offer even bigger moves. I personally avoid trading all sterling crosses except for euro pound because they're just too volatile for my own appetite and my stops. However, I love to trade euro crosses like euro Aussie and euro Kiwi, and I love to trade Swiss and CAD crosses. They can have more volatility, but they also trade very well on fundamental or relative strength or weakness plays. So the first step is to choose the pairs that align with how much risk you're willing to take on. Step number 2, think about what times of day you can trade, because this will have a significant impact in determining what pairs will actually move during your trading session and what you should actually trade. If you're trading during the Asia session, for example, and I will tell you my best trades are during the Asia session, you'll find that the Australian dollar, New Zealand dollar, and Japanese yen are the most active. These currencies see more movement because their own markets are open, and that provides more trading opportunities, more participation, more volatility. That's also the time of day when these countries tend to release their economic data, which can provide a further catalyst for movement. During the Asia session, my favorite currency pairs to trade are Euro Aussie, Euro Kiwi, Aussie Swiss, Kiwi Swiss, Aussie CAD, and Kiwi CAD. I'll trade the euro pairs if I am very confident about the trade and I want faster, quicker movements. These are usually resolved fairly quickly. I find that if it's a trending night, they can move as much as 50 pips in the hour or 2 after the Tokyo Open. If I'm feeling a little less confident or I'm looking for slower trades to carry overnight, I'll opt for the Swiss or CAD crosses against the commodity currencies. Now, if you're trading a European session, all of the euro crosses from euro dollar, euro pound, and euro Swiss, and the euro against commodity currencies will move. The same is true for the British pound pairs. So those are the ones you want to be looking at. If you're trading the US session, you have a wider range of active pairs to choose from, but the best pairs to trade are typically the ones against the US dollar. For the most part, however, all of the major currency pairs are fair game during this time because it is also the most active period of the day. I personally love to trade Eurodollar, Dollar Yen, Dollar Swiss, and Dollar CAD during the early US session, which is before the US equity market open. The last step is to decide whether you want to trade strong versus weak currencies or keep it simple by focusing on the US dollar outlook and risk appetite. If it is a big day in the stock market, up or down, then the best Forex pairs to trade should be the ones that include the US dollar or the Japanese yen. For example, if stocks are down a lot, there's a good chance that the US dollar and the Japanese yen will rise in value against euro, sterling, the Australian, and New Zealand dollars. If stocks are up a lot, we're talking about triple digits here, there's a good chance The dollar and the yen will be trading lower versus the euro, sterling, the Australian, and New Zealand dollars. Now, of course, in any given day, there could be specific data or event risks to those countries that creates some sort of divergence, but it's a good rule of thumb, generally speaking. This is a more straightforward approach where you can base your trades on the overall strength and weakness of the US dollar. This can simplify your analysis and help you stay focused. Alternatively, you might want to look for strong versus weak currency pairs, such as a pairing a strong euro with a weak Australian dollar. This strategy requires a little bit more analysis, but can be very rewarding if done correctly. A good tip for this is to look at the economic calendar that just came out, what came out overnight or in the morning. If there's a very strong or weak piece of data from one country and nothing from the other, and the currency is reacting the way it should instead of ignoring the data, there could be some nice continuation moves. To sum it up, choosing the right Forex pairs boils down to understanding your risk tolerance, knowing when you can trade, and deciding on your trading strategy. If you're just starting out, I recommend sticking with 1 or 2 currency pairs. Learn them well, understand how they behave against the US dollar, how they interact with each other, the times of day they're the most active, and which pieces of economic data actually impact them the most. I hope you enjoyed this video. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more trading tips. Happy trading, everyone. I will see you next time.